Namaskar, hello everyone, and good evening to everyone.
Good evening.
We are back with the session on GST proposals in Union Budget, which came just in July 2024. We welcome you all for this session. We will hold on for another 2 3 minutes for all the participants to join. Almost 70 people registered, but we are waiting for everyone to join. Maybe we'll wait for another 2 3 minutes. In the meanwhile, I will try to give you a backdrop of uh, what we do. As a firm, we do tax, audit, and consulting. And as a part of our tax research, we always focus on Indian budget, which comes every year. This time we had two budgets. One budget came as a vote on account in February, and again after the election, after the new government settled down in June, sorry, in July, we could see another budget which is coming in, which is like an interim budget. This budget specifically covers a lot of economic outlays and incomes of the government. One of the very important incomes of the government is a tax revenue. So tax provisions also go under a lot of change with respect to this union budget, which comes in. One of the biggest areas of focus is direct tax, and the second biggest area of focus of the government is indirect tax, that is GST and customs duty. Customs duty is one area where most of the times rates go under change, but in GST, a lot of other things change through the GST Council meeting, which generally happens just before the union budget, and the notifications come on the day of the union budget or one day before the union budget. So they are almost parallel to the union budget. We will hear today's session from CA Pranav Kapadia, who is a tax expert, or you can say GST expert from team APMH, along with his team, Krutika, Urvi, and other chartered accountants who have done a lot of research in this topic for last 1 week, and also brought out a nice detailed booklet apart from bullet points which we circulated through an email. You would have already received the booklet as well. Now we are going to start with the session proper on the union budget. Don't worry, we will upload this recorded video on our YouTube channel, which is the APMH YouTube channel, and you all can, of course, see it later on as well. In the meanwhile, I would like to request all of you to put your mics on mute, and you have chat box on left hand side corner if you want to ask any questions, or there is also a Q&A tab there on the upside left, which you can use to ask questions to CA Pranav Kapadia on GST provisions or GST proposals in this budget. With this, I would like to start the session. And of course, we will keep on addressing your questions, compiling your questions, and asking him as and when possible. So don't worry. So you can keep on posting your questions, comments, suggestions on the chat box, and we will pick them up as the time passes. Thank you everyone for making it to this session. And I would like to request Pranav bhai to start the discussion proper, and then we will take it as it proceeds. Thank you.
Thank you, Mitesh, and good evening, everybody. Welcome to this analysis on the indirect tax proposals announced in the Union Budget number 2 of 2024. Before moving into the topic proper, I would first like to acknowledge and thank our APMH team, all those persons who are instrumental in bringing out today's webinar and yesterday's webinar on income tax by Amit Bhai, our partner, and today on GST. And I would like to first thank especially our team members, CA Pratik Mehta, CA Krutika Jain, CA Urvi Binjiani, CA Saifuddin, and CA Koral Mehta, who have been instrumental in preparing the budget booklet on the GST part of it, and also instrumental in making the PPT for sharing our views on these intricate issues which arise due to the amendments which are proposed to be brought out in Union Budget 2024 of July 2024. Well, with this, I like to share my screen. We have made a small PPT wherein I'll put up some of the amendments which have come through the Union Budget. I just share my screen. Give me a moment. Yes, is my PPT visible? Okay, fine. I have CA Urvi Bimjiani, who has recently qualified. She's there with me in my cabin just to assist any questions or bouncers which come from any of the participants. So she's there to assist me, and of course, our team members are also there. Well, friends, a small disclaimer that this is only a compilation of views purely with academic interest and for the audience to get an additional perspective about the GST related proposals in the Union Budget. And these are only to impart knowledge and not and should not be construed as a legal opinion. In case any specific issues are there, you all can kindly connect to any one of us, and we would be glad to answer your queries or specific replies. Well, this was the seventh budget presented by our Honorable Finance Minister Srimati Nirmala Sitharaman. And if we see the foundation stone which has been laid by the Modi government and in this government 3.0, Modi government 3.0, I think they have continued striving the path for Viksit Bharat, our vision to 2047 when we are going to complete 100 years of independence. And at that time, or maybe before that, India will become a developed country. Developed India is the Viksit Bharat. And this is the roadmap. And the GST amendments also seek to travel into that direction. Of course, the budget, as a finance minister or as a politician, focuses on four major castes, which is the Garib, the Mahilai, the Yuva, and the Annadata, which is the farmer. So when we try to analyze the budget, the entire theme was on that. And aligning with that forecast and the theme are the four pillars of employment, skilling, MSME, and and middle caste. So these four are so if you see all the provisions, the government or the finance minister has always tried to harp upon this. And there are apart from this, there are nine pillars of the budget, which are infrastructure, again MSME, building up the foreign currency, the rather the foreign counterparts, and the nation's building. So all those things are there in the budget. Our focus, of course, is going to remain on GST, and this is what was the single line. If when we were seeing the budget, we could when the part two of the budget speech started, and the FM started with the word GST is a success of vast proportions, and we thought, okay, there are going to be lots of changes, and the finance minister would be telling a lot about the changes in the GST law, but apart from one paragraph of a vast proportion of success on GST, no amendments were spelled out in the budget speech. But we could see when we saw the print, we could see that there are around 45, 46 amendments in the GST Act itself. Of course, some of them are consequential, but many amendments have been brought about in this. And let's have a look at the major highlights of the proposals. The first is regarding the time limit for claiming ITC for invoices or debit notes under Section 16(4), which has been extended up to 30th November 2001. This is basically for the initial periods of GST. I put a smiley besides every highlight point. Either it's a smiley or a frowny, for telling that whether it's a uh, positive or a negative. So this is a positive move. These are just the pointers. I will go to the intricacies of each of these points when we go to the subsequent slides. Then there's a major reshuffle in section 73, 74, wherein there are different time limits as of now under section 73 and 74 for issuance of show cause notices and issuance of demand orders pursuant to that. A major amendment which is brought about is that this entire process, which is there under section 73 and 74, there is going to be a sunset clause on these two sections, and this will be applicable only for the periods up to financial year 23-24. From financial year 24-25, there will be a common section, section 74A, which will cover the provisions of both these sections, and both these sections provisions have been combined in new section 74A. We will go into the details of those sections. Apart from this, there's a reduction in the maximum pre-deposit for filing of appeals before the appellate authority. There is a reduction in pre-deposit percentage amount for filing appeals. So one is the monetary limit, other is the percentage limit. So in both the limits, there are changes. Then the most awaited amendment, or the most sought after amendment, was regarding amnesty under GST. This has not come by way of an amnesty per se. There is no word amnesty which is being spoken either by the finance minister or by the CBIC or the GST council. They have only mentioned that for reducing litigation of initial periods, they are introducing a new section 128A for waiver of interest and penalties. So this is an indirect amnesty itself. It has it has its own conditions to be fulfilled, various parameters to be fulfilled, because we know there are so many stages wherein such notices are lying. Some where the audits have been completed, but the notice is not issued. Some where the notice is issued, but the order is not issued. Some places where the order is issued, but the order has not been appealed against. And in some cases, the appeal has already been filed. So I think for each of those cases, we need to analyze what are going to be the repercussions qua each company. Also, I am just going to give you a pointer on this, that there could be various show cause notices wherein there could be, say, there are 5 points issued in the show cause notice, and a person may have, challenged to paid for 3, or might be challenging all the 5 points, or there could be various points which can arise in each of those notices and in the appellate orders. So we really need to understand the implications of this new section 128 and how it is going to benefit us. I put a smiley against it, and definitely this is a beneficial provisions, except in some cases where you are not fitting into those conditions prescribed. The asterisk marks conditions apply. Okay, so that is where we need to check on. Coming to the effective dates for the budget amendments. The proposed amendments in GST shall come into force on such date as the central government may by official notification in the official gazette appoint. So as of now, what we are discussing are only the proposals which have been introduced in the finance bill. Unlike the direct tax amendments, I would like to mention over here, unlike the direct tax amendments, the GST related amendments become effective only after approval from all the states. See, Finance Act requires, the Indirect Tax Act requires the assent of the president, and that's it. Here, the president assent as well as the approval from all the states is required. We know that this time some states have got bereaved because they have not got the benefits which Bihar and Telangana have got. Right. So there could be some hassles in getting these approvals, and based on the past experience, we have seen that it takes around 6 to 9 months for these amendments to become effective actively in the GST law. Right. So we need to understand that. Of course, some amendments could be having the amendments when they become effective. Some could be having some retrospective effect, or some effective date thereafter also. So not necessary that that will be the exact effective date, because there have been certain announcements where certain amendments will be effective from a certain date, but that too only after the approval has come from all states. And let's see, if Modi 3.0 is much more powerful, we may get the amendments very soon. So let's keep our fingers crossed for that. Okay, Coming to the amendments, I think wherever the amendments have come, I'll be talking about the CGST Act. At one or two places, there is a reference to the IGST Act, the Compensation Act, and the CES Act. Um, so generally, all amendments pertain to the CGST Act, and the consequential effects have generally been made in the IGST Act. So I'll be taking up the CGST amendments itself. One more point is that I will not taking up all the amendments. I am taking up only the important amendments which are applicable in general to various businesses. And I know that among the participants today also there are various persons whom I know very personally well, and they have different business styles. The GST applicability could be different in their individual cases also. So not all provisions will be applicable to all, but some of them, yes, definitely will be applicable across the board. Okay. GST on undenatured extra neutral alcohol was being levied as of now currently. Now this has been sought to be taken out of the GST preview, and it will be taxed under the local VAT and excise acts. So this is becoming at par with petrol, diesel, aviation turbine fuel, etc., which are on which already VAT and excise is applicable, as was applicable under the erstwhile uh, law, or in the erstwhile regime pre 1st July 2017. So now, not a normal regular impact on all of us, but we need to understand that instead of bringing petrol, diesel, alcohol, and aviation turbine fuel into the normal stream of GST, which was being discussed and which was being proposed by the industry, a reverse step has been taken by the government to give benefit to the alcohol consumption, because see, this undenatured extra neutral alcohol is used in manufacture of alcoholic liquor for human consumption. So very specific kind of a product that has been taken out of GST, and to give benefit to that industry, it has been taken into the VAT regime. And the entire industry was expecting that petrol, diesel would come out of the purview of VAT and get back into the mainstream of GST, but that has not happened. It is a big, big revenue for the government, but that has not happened. So till now, there was a list of 5 items. Now that list becomes 6 items, which are outside the purview of GST. A new section 11A, has been introduced in the CGST Act, which states that it is empowering the government to regularize non-levy or short levy of central tax due to any general practice prevalent in the trade. Similar power is also being proposed in IGST, UTGST, and GST Compensation Act. So, what is the impact of this? In cases where a practice is generally prevalent regarding levy or non-levy of GST on any supply of goods or services or both, the government shall direct by notification that the whole or differential GST payable on such supplies, but for the said practice, shall not be required to be paid in respect of the supplies on which the GST was not or is not being levied, or was or is being short levied. I know it's a complex statement, but I'll try to explain it in a simpler language. General practice. What do we mean by general practice? I'll give you one example. We all like ice cream, and ice cream has been the bone of contention between the GST department and the ice cream lovers. So what has happened is, the entire industry was thinking that ice cream should be taxed at 5%. Government was telling no, ice cream is outside the purview. It is when, especially ice cream, when they are sold in ice cream parlor, they are not manufactured goods. They should be charged separately, and the rate of tax by the government was being levied at 18%. Thereafter, the government came out with a circular telling that if that ice cream parlor has charged 5%, it will remain at 5%. If it has charged 18%, it will remain at 18%. If you have paid 18%, you will not get difference 5% as refund. But the question was that those who have paid 5%, will the government ask them to pay 18%? Okay, that was one. So because based on the industry practice, this was a issue being faced. Then there was a second issue with respect to, again, Swiggy and Zomato. Most of us, are so much used to Swiggy, Zomato, wherein if the product is a product which is supplied by a restaurant, then Swiggy or Zomato is liable to pay GST at the rate of 5% under reverse charge mechanism. Under that special clause 9(5), as a notified person who is required to pay tax. Now there was lots of confusion in the entire industry. We know that some cases or some taxpayers, although they are not restaurants or eating houses, the registration of such persons under Swiggy, Zomato was being done under those categories. And then Swiggy was paying. Actually, in such cases, Swiggy was not required to pay, or Zomato. I am just giving those names as a reference. Please, I have got nothing to do for or against Swiggy or Zomato. It is just for a better understanding that I'm using these names. So, what was happening in such cases? That supplier of that product or that food product was not paying tax. Swiggy or Zomato was paying the tax. Now, when the assessment of that supplier takes place, the department is telling, no, this is you are the person who is required to pay the tax and not the person under reverse charge. So, but this has become a general practice. And there are only two such big players in the market. So I know it is a very difficult to, and there could be different examples of chemical market, or there could be different examples of a product wherein a entire, say, chemical market for a particular product is following, say, one particular HSN code. And they feel that this under this HSN code, their product or a mixture of their product is qualifying. But the department may be thinking it in a different manner. So such classification issues can also come up in such cases. But okay, so as a first point, what the government has sought to do, the government has told, okay, if it is a general practice, then whatever tax is collected, whether or okay, there could be a situation where tax should not have been collected or should not be collected. That also category has been covered. So on all these parameters, the government has come out with this proposition that if that practice is being generally followed, then the government shall by notification identify that practice, and based on that notification, the whole tax or the differential tax as may be applicable will be waived off. As of now, no such notification or clarification has come that what will be defined as a general practice, and within that general practice, which industry or which nature of transaction would be covered. But I think it is at least a welcome move as far as the government is concerned, that they have taken such a stand, and which will reduce litigations to a great extent in future. But let's see how this actually gets implemented. So I think this, I've already mentioned that it is a good thing that this government has recognized the industry practice. And of course, there are concerns, what could be the industry practice. And we know the taxpayers also, the taxpayers will, they should not come out with a new idea and tell that, okay, this is the general practice and hence we should not be made to pay the tax. Right. So, so let's see how this unfolds, but it will be very, very specific to the extent of the exact notification and the notified category of people and not otherwise. Okay. Coming to the next topic, time of supply in case of reverse charge mechanism. Time of supply of services, because section 13, it is time of supply of services. Now we are again, this section 13 reverse charge mechanism is linked to one amendment in section 13. There's another amendment in the date of issue of invoice under reverse charge, which is under section 31. There is one more amendment simultaneously, or which has come again by way of a circular also, regarding time limit for availing input tax credit under section 16. So there's a circular, plus there are two amendments in section 16. I'll cover up each of them as and when they come up. So what is the amendment proposed? Amendment is proposed in section 13(3)(b) of the CGST Act to specify that time of supply shall be 60 days from the date of issue of invoice or any other document in lieu thereof by the supplier in cases where the invoice is required to be issued by the supplier of services. So that 60 days criteria, what this amendment is telling, see, let's understand, normally for reverse charge mechanism, the time limit to issue a invoice, a self invoice by the recipient of service. I'll give you an example, say a transport business, and there is a self invoice which is required to be generated by the recipient of service. Okay. So if the transporter is issuing an invoice and the transporter is a registered or transporter, then the self invoice or the reverse charge liability has to be paid. The time of supply is within 60 days from the date of issue of invoice. Okay, this is one type of transporter, say Lalji Mulji or Nursi Nancy or some big such transporter. There could be second small timer transporters who are not registered under GST. And they are also issuing a document by whatever name called. It could be a consignment note, it could be a LR, or it could be just another document. And on that also there is a liability for reverse charge mechanism. So now the law is amended, which says that there's a clause C which is inserted to provide that the time of supply of services shall be the date of issue of invoice by the recipient in cases where the invoice is to be paid by the recipient on reverse charge basis. So in this example, in the second example of the transporter who is unregistered, the time of supply will be the date when the recipient issues the invoice under reverse charge mechanism. So there, that linking with the date of invoice to 60 days time limit is not required. I think this is the huge relief which is given by the government, because in such cases we have seen lots of issues coming up, especially in case of import of services, wherein we have seen so many taxpayers which have missed out the bus of paying tax under reverse charge when during audit or in subsequent during the GST or 990 or maybe during the department audit, it is identified, okay, that there is a liability on import of services under reverse charge mechanism. Such persons pay the tax and try to claim the credit. The only issue which was coming on that, what is the time of supply? If the time of say the invoice was issued, say there's an import of services and the invoice for 1 crore rupees was issued on 31st March 2022, and during the audit of 21-22 it is identified in January 2023 that this tax was payable, but the date for claiming ITC against that liability of reverse charge was 30th November of the earlier period. So what is happening in such cases? So whenever reverse charge is there, let's understand there are two trigger points. One is liability to pay the tax under reverse charge. Second is taking credit of that tax which is paid under reverse charge. Two trigger points simultaneously. Every time we have to think of two trigger points whenever reverse charge applies. So whenever such things were happening, there was a dilemma that whether the input tax credit of such import of service, say in this case 1 crore was the import of services and 18 lakh was the GST liability which was payable, and the dealer is paying the GST liability along with interest. The question was how to claim the input tax credit and whether it will be eligible or not, and whether it will trigger the rigors of section 16.4. So that was a dilemma. Luckily now this is a very positive amendment which says that whenever the recipient prepares the self invoice in such cases, then that will be deemed to be the time of supply. A very, very welcome amendment. Consequentially, when section 13.3c is amended, simultaneously 31.3f, which is the tax invoice, the self invoice provision, has been proposed to be amended to prescribe the time limit for issuance of invoice by recipient in case of RCM supplies. So this is similarly, it is so. I think this is only a consequential amendment which says that the time of supply or for the invoice, self invoice, should be considered under section 13.3c. That is what a correlation has been made. Right. So now the amendment seeks to, what is the impact? The amendment seeks to specify that in cases where the supplier of services is registered, the time of supplying for discharging liability under RCM shall be 60 days from the date of issue of invoice by such supplier. And this provision was already there. This is nothing new. And in cases where the supplier is unregistered, the time of supply shall be the date when the invoice is issued by the recipient of such supply. So I think a welcome provision. And this is the normal provision. If we try to read the entire reverse charge provision under section 13(3)(a), B, C, then it reads as under, this is the summary of the existing plus the new. RCM liability in case of supply of services is considered to be considered as earlier of date of payment or date immediately following 60 days from the date of invoice of registered supplier or date of invoice issued by the recipient in cases where the supplier is unregistered. Coming to the next most important amendment in section 16. We all know that section 16 is the heart of GST and the bone of contention between the department and the taxpayer. Section 16 is about input tax credit. The taxpayer always wants the input tax credit and the department always wants to deny it. That is always there. Within that, there are various conditions. Within that, section 16.4 was there, and section 16.4 had some very rigorous conditions. It had some time limits. It had also, and it still has certain time limits that the input tax credit on an invoice or a debit note should be claimed before 30th November from the end of the year to which such invoice or debit note relates. For example, for an invoice of 31st March 2023, the last date to avail input tax credit is 30th November 23. Similarly, for a debit note which is issued, which is having a date of 31st March 2023, for that, the last date is 30th November 2023. Now coming to the two amendments which are proposed in section 16. Section 16.4 was there. It is still there on statute. So there is the insertion of section 16.5 as well as insertion of section 16.6. So 16.5, what has been done in section 16.5? The time limit for claiming ITC for invoices or debit notes under section 16.4 has been extended to 30th November 2021 for financial years 17-18, 18-19, 19-20, and 2021. Since being the first 4 years of implementation of GST. Second, the date 30th November 2021 was first introduced in the Finance Act 21, and the date was extended to 30th November 2021 at that point of time. Then some taxpayer had gone to the court and argued in the court that for financial year 1920, if you have given the date, sorry, that date was 30th November 2022, Finance Act 22, 30th November 2022. If for financial year 21-22, the date is 30th November, why for the earlier year, that date is due date of filing return for September, that is 20th October. So somebody had challenged this provision in the court. The court, in its verdict, told that the provision which has come after 2022 should be made applicable for the earlier years also. In sync with that judgment, a very positive step has been taken by the GST Council, the Finance Ministry, and this relaxation has been brought on statute for the first 4 years in case anybody who has missed the bus of claiming input tax credit and filed return late, then the time limit of 30th November 2021 will be applicable in their cases and not the respective time limits as were mentioned for the under section 16.4 for each of those respective years. So again, a welcome provision. Lots of cases are there. We have seen so many cases wherein people had missed out to take ITC by the due date and filed a return late by few days. The 3B was filed late by 5 days, 10 days, and there also such cases are lying in at the appellate level. So a very welcome provision for under section 16.5. Then one more amendment in section 16, whereby subsection 6 has been introduced. There has been a conditional relaxation for claiming ITC for invoices or debit note for cases where returns are filed within 30 days of the order of revocation of cancellation of registration. Now, what is that? And the said ITC was not restricted under Section 16(4) on the date of order of cancellation. I think we can explain it with the help of an example. Say a dealer was registered during financial year 22-23. He had to file or claim his ITC by 30th November 2023. I'm taking the post amend this so that the earlier period does not come. So by 2023, he was by 30th November 2023, he was supposed to take his input tax credit for the entire year. Now, in such cases, say his number has got cancelled on say 1st October 2023, and he has applied for revocation of cancellation. The officer has cancelled his number, maybe because of whatever reason. He has not applied for cancellation. The officer has cancelled his registration. So, so the taxpayer has applied for revocation of cancellation. And then, after having applied for revocation of cancellation of registration, there is an order which is issued by the officer for revoking that cancellation and restoring the registration. Okay. In such cases, if the date between 1st October, say on 1st October, his number was cancelled, 1st October 23, and it was restored on, say, 31st December 2023, it does not happen in that period. I am just giving an example. It does not happen within 3 months. But say within 3 months and that date has of 30th November has gone away, then in such cases, that person will get the benefit if he files a fresh GSTR 3B within 30 days from 31st December. That is the date of order of revocation of cancellation of registration. That is how you have to read the entire thing. So in simplicity, by 31st January, he needs to file a GSTR 3B in order to claim the ITC of the earlier periods in this example. Okay. There is one more point or a restriction which has been given here. Conditions apply. Say this cancellation had happened on 1st December and he has not filed his return, then he will not get the benefit. Even if he applies for cancellation of if he applies for cancellation of registration, revocation of cancellation of registration thereafter also, then he will not get the benefit. But otherwise, if earlier it had happened and if he was eligible otherwise, that is what is mentioned in the section. If otherwise he was eligible, then he will be granted. So we have to keep that in mind. Yeah, but yeah, again, beneficial provision. Okay. Then while going through the budget clauses, we came through one clause number 146 in the finance bill, and which mentions that no refund shall be made of all the tax paid or ITC reversed which would not have been so paid or not reversed had section 114 been in force at all material times. So we're just trying to find out that what does it actually mean. So when we went into that clause 146 and where there was a reference of section 114, it was not section 114 of the CGST Act, IGST Act, not of the GST law, but it was of the finance bill itself. And when we go to the finance bill clause 144 or section 144 of the finance bill, there it refers to the amendments in section 16(5) and 66. But there is no corresponding amendment in section 16(5) or 16(6) or in any other provision which has come. It is just a mention about that. I think the government has possibly missed to place this amendment at the appropriate place or section. This appears to be so. But what is the impact of this amendment had it been there? It says that in case you already reversed the ITC earlier, say for example, there was an input tax credit which was available, which was to be claimed by 30th of November of say 2023 and say, or 2022 we take an example, and there is a show cause notice. Based on the show cause notice, the taxpayer has reversed, telling that okay, I don't want to litigate the matter and I will reverse the ITC. So once having reversed that ITC and paid the tax, now we will not become eligible for the refund in spite of such a retrospective amendment. That is what the meaning is. So what we learn from this is that under GST, input tax credit लेने का है तो लेके रखने का, Government will always have means to, deny that input tax credit, but we should keep our case alive in whatever level, appeal or at higher level, lower level, keep the case alive, and there is sure to be coming with some concession or amnesty or waiver in future, or a clarification in future, because because this GST is a new law. There are so many issues in that law. I don't tell that you claim what is ineligible, but wherever there is a doubt, wherever there is an issue regarding claim of ITC, better to avail it. You may utilize or you may not utilize based on the facts of your case. And if the officer denies the credit, you may keep the matter live in appeal. Of course, it depends on cost benefit ratio, risk appetite of the taxpayer, etc., etc. But it is always advisable that we need to keep the case live, and something else here and there will pop up, which will be beneficial. Okay, a small amendment regarding TDS return filing. This is not applicable to to regular taxpayers. It is for the government agencies only. So those who are having contracts with government agency, they should note that as of now, the government agencies were filing their TDS returns only in those months where they were deducting TDS, and not for all the months. Now it has been made compulsory for those government and agencies to file even a nil TDS liability return. That's the only amendment. Not much in that. Okay. Insertion of section 5450. No refund if zero rated supply are subjected to export duty. So this is regarding refunds. Already existing, there is a proviso which bars refund on the unutilized input tax credit in cases where goods exported out of India are subject to export duty. So if there's an export duty on a particular product, then you cannot claim refund under inverted duty structure or under export of goods under LUT. So in these two conditions, there was no basically not inverted duty structure, because this is export, so applicable only for exports. But 54 speaks of both, specifically as regards the export. If there is a product on which export duty is payable, then on that you will not get a refund even if you have exported the goods under LUT. Now the amendment seeks to restrict refund in case of zero rated supply of goods subject to export duty, whether supplied under LUT or with payment of tax. So even if you are making, so there was no such debar till now in this section. So there could have been situations wherein a person has exported goods on payment of tax, also has paid export duty, and claimed the refund because that refund is coming from the customs department directly, and there is no nexus or checking on that. So possibly they are trying to plug in that loophole which was there and restrict the refund. One more amendment which has come is in the word export. Earlier, the words which were used were goods exported out of India. Now the words which are used are zero rated supply. So exported out of India has a restricted meaning as compared to zero rated supply. You might be aware that zero rated supplies covers actual export of goods, means moving the goods from India to territory outside India, plus supplies of goods from within India to a SEZ area, to a SEZ unit, that is also considered under zero rated. So in both the cases, the refund will be restricted in case export duty is paid. I am not sure whether any export duty becomes payable on that product if it is sent to a SEZ unit or not. Maybe there could be some stray cases here and there. Majority of the cases, we have not seen export duty being paid. And corresponding amendment has also been made in section 16 of the IGST Act. Any questions so far?
Pranab, there is one question
Uh,
uh, regarding this general practice in the industry. What exactly does it mean? How it happens in the industry? Can you give some example on that and
Actually, I
explain?
already
Like, for
gave
example, you
example of
spoke about
Swiggy,
the
Zomato. Yeah.
right, like transport industry or any specific industry.
Yeah. So I gave the example. I gave two examples. One example which I gave was regarding the ice cream parlors, wherein there was an issue that whether ice cream is when ice cream is a takeaway. Generally, ice cream parlors there's a takeaway. and with so when you say Baskin Robbins, it will have multiple uh, outlets, and manufacturing might be happening at a central place. It's not a restaurant where where that ice cream is manufactured. Okay, if you go to Froyland could be, there's a mixture of, you bring out one scoop this, you add this, and then your ice cream is ready. So there could be a different category for Froyland, but for other ice cream parlors, there was the issue that whether if it is being sold as a restaurant or as a food is being, taken as for consumption as a restaurant, or within a restaurant, or within that eating house which has a place outside to sit, which ice cream parlors generally have. And that was the entire dispute, that whether they should charge 5% or whether they should charge 18%. Then after 1.5 year after the amendment came in July 21, and then after 1.5 year they came out with a circular that there's a lots of confusion in the industry, and some people are still charging 5%, some are still charging 18%. So here's an industry practice for all these ice cream parlors: whatever taxes they have collected and paid, there will be a status quo, and there no demand will be raised for those who have paid at 5% instead of 18%. So in such cases, I think this is because of the general industry practice, all ice cream parlors doing the same thing. That could be the thing. They have not defined what is going to be a general practice, but I think government will come out with specific notification qua specific industry, and based on that, only those industries will get the benefit. Others will not get the benefit.
Okay, so basically they have taken the power to give benefit to specific industries
Yes.
in
Yes.
specific
So
situations. It is not
in case
so
if the
one
industry
can't take it.
association, yes, Mitesh,
So
sorry, yeah,
one can't take it for granted that this is the practice in our industry, and so we are following it, and so
not
the
at all,
government will give the
not at
relief.
all.
That is not how it is going to work.
That is not how
They
it
have
is going
just
to
taken the
happen.
powers to
Correct.
give relief in certain situations
Correct.
without
And
coming out with specific notifications
perfect. Yes.
the in such situations. So, a
Correct.
second question that Pranabhai was regarding the amendments. So, what we are saying is all the amendments will be effective from the date of notification. Only proposals are coming in the budget. So, are we saying that no amendments have still happened, or are there few which have already become effective and one has to start taking care of them from immediate effect from 23rd of June, sorry, 23rd of July 24?
No, unlike the direct tax proposals, the capital gains amendments which came, they became effective from the date of the budget on 23rd July itself. But and the rest of the amendments, some will come from 1st October, or from, whenever different dates have been given. But under GST, these amendments have not yet been notified. Okay, I am talking only of those amendments which are specified or which have come through the finance bill number 2 of 2024 on 23rd July. Let me tell you one more thing, and which I have in my slides also. After the 53rd GST Council meeting, which was held on 22nd June 2024, there have been more than 25 circulars which have come, which have given so many clarifications. There are two, three notifications, certain rules have been amended. So all those notification circulars have become effective from the respective dates, or the dates mentioned therein. There could be different dates. So I think whenever we read the law, we need to understand the effective date of implementation of that particular provision itself. So
Okay.
in
So,
effect, for budget, none of these have become effective as on today.
but there was a mini budget in the form of council meeting which happened just before the budget, and lot
Yes,
of the
yes, yes, yes.
provisions came into force via notifications with the help of after that council meeting,
Circulars.
right?
And the circulars, more than 25 circulars have come. So I think that's a huge, and lots of clarifications, lots of impact on that circulars.
So, are we going to cover those as well in this discussion, or we are
Yeah,
going to give any
I have put
highlights?
it. Yeah, I if time permits, I can take up. If the participants are ready, I can share my knowledge. There's no issue. I've taken it in the slides at the end.
Okay, perfect, perfect, perfect. So, yeah, so I think we can go ahead with the discussion.
Right, right. Next is amendment in section 70. authorized representative can attend summons. One may think authorized representative in a company, say it's a limited company, there'll be directors, there'll be managers, there'll be finance managers, there'll be CEO, CFO, so many things. So there was an issue with regard to who will be the person on whom the summons will be issued and who will be attending. Because nowadays there are so many summons being issued and so many DGGI investigations happening and so many fraud cases happening, and the fallout or the multiple fallout on other taxpayers in the chain is also happening on both sides, on the supply side as well as on the input tax credit side, qua that particular taxpayer. So lots of issues have come up, that who should be summoned and who should come, because once they call for a summons, you have to go prepared. You should be the that person, and summons is always of an individual person. Summons is of an individual person. It is not of, in general. So that person has to physically attend personally and reply to the queries raised by the officer. So here, in some cases, even in some government organizations, there were summons being issued. I will not name I'll not give the name of that company, but the director of that company was summoned by the department. The director of that company told that I'm the managing director of such a big company having lakhs of crores of business, which we are doing it for the government of India. I will not come. I will send my authorized representative. The officer who had sent this summons, and these officers are very egoistic. They said, no, I've issued summons in the name of Mr. So and so company. He only has to come. That matter went to the court, and then the court allowed that person to appoint an authorized representative. Then the department also came out with special instructions in such cases of who should be summoned, who should not be summoned, who can attend, who cannot attend. As a fallout of all those things which have happened in the last few years, this amendment has come now that such person can now either attend in person or through an authorized representative, which we normally see in all cases, but not in case of summons. In all income tax cases, GST department notices, etc., or authorized representative can enter, can attend the matter. But now for summons also they have allowed it. Again, this is the welcome provision.
Pranabhai, there is one question regarding the earlier
You are not
discussion
going to see
that
the
we had
question.
done.
Huh?
Uh, he's asking that one of our vendors actually cancelled the GST number, the
Hmm.
registration on May 23, in May
Hmm.
23, and still he charged GST in July 24.
Huh.
So he said that we are following up with that person. He is
Hmm.
asking, he is telling that he will talk to his chartered accountant, get the number restored, file the returns, and then this company can claim the refund. So
Hmm.
is this practically possible, or will they have to lose the refund, or will they have to ask the party to pay the money that they have collected in the name of GST?
Basically, I think this question is not falling out of the amendment to the budget, but we can still answer. Basically, this is a case of a person whose registration has been cancelled. If we are having a proper tax invoice, uh, our suggestion is to claim it, claim the ITC. Of course, there have been difficulties in after 1st January 2022, wherein that reflecting in 2A has become mandatory as per section 16(2)AA of the CGST Act. So that has become mandatory. Prior to that, I think if the period is prior to that, it's much easier to claim and to litigate and fight. Better to litigate and fight. Department is not allowing at first level. Let me tell you, department is not allowing in any of such cases at first level. These cases will travel till tribunal. Before that, no relief is expected, or you can go to high court. But high court is only remanding back the matters to the officer to verify, and it again is a round loop again. But there could be situations which we have faced practically, wherein a number of the registration number of a seller or a supplier was cancelled, but that supplier has not agreed to that cancellation and has applied for revocation. Revocation was not given. He has gone and filed an appeal against that. So because he's a genuine taxpayer. So if you are able to gather that information, I think that will really help the matter for claiming the ITC. I think I can say that much.
Okay, perfect.
Yeah. Yeah.
Okay, I hope the question is getting addressed. And you can feel free to ask any questions that are coming in your mind with regards to mainly the proposals in the union budget, but generally also if you feel anything is falling in line with the provisions or the proposals, you may ask those questions online and we'll try to address them as the flow happens. Thank you. Thank you. Yes, Pranava, you can continue.
Yes, yes. So then coming to the section 73. So there are twin sections, section 73 and 74. Section 73 addresses notices in case of determination of tax which is not paid or short paid. Not paid means कुछ tax नहीं भरा, short paid means 100 रुपया भरना था 80 रुपया भरा है. Erroneously refunded. Erroneously refunded means there was a refund claim which is made by a taxpayer. Say he has applied for a refund of 1 lakh rupees. He was granted the refund of 1 lakh rupees, but he was actually eligible for only 80,000 rupees of refund. So that refund has been erroneously granted. So that recovery of refund granted provisions get triggered through this section. So refund erroneously granted or ITC wrongly availed or utilized. So ITC wrongly availed or utilized is a normal input tax credit which is wrongly availed and or utilized. So it is availed or utilized and not availed and utilized. So even if it is not utilized but only availed, section 73 can trigger. So section 73 is just like the assessment wherein a notice is issued and these notices are coming and most of the taxpayers are receiving such notices. Everybody would be aware of that. And section 73, we need to understand these notices are only for reasons other than fraud, willful misstatement, or suppression of facts. If it is a matter of fraud, willful misstatement, so fraud, I think everybody understands, okay, that if that tax has not been paid or short paid because by way of fraud by the taxpayer, something intentional. Fraud is something intentional. Willful misstatement is again something intentional. I was that taxpayer was supposed to give the sales register showing a turnover of 1 crore, but he has shown only the turnover of 80 lakhs in the sales statement submitted to the department, and which is willfully submitted and not by way of an error. Okay, so that is willful misstatement or suppression of facts. There are 10 types of sales which are made by the or 10 series of sales transactions which are made by the seller, but he's only reflecting 8 of them and 2 he's not reflecting or not showing. So he's suppressing some fact, or there could be various examples of suppression of facts. I'm just giving, even suppression of facts has been defined in section 73 by way of an explanation. Okay, so this is the basic. So wherever a show cause notice is issued under section 73 for reasons other than fraud, willful misstatement, or suppression of facts for determination of tax, there in such cases now a sunset clause has come whereby this section 73 will be applicable only for the periods up to financial year 23-24 and 73-12 is amended. Similarly, section 74 is available uh, which speaks about such similar notices but in cases by reasons of fraud, willful misstatement, or suppression of facts. There also the sunset clauses come on that section. So this twin section, section 73 and 74, sunset. See, let's understand this sunset clause, though has been announced. Still for 23-24, the due date for issuing notice under section 74 is 5 years from end of from the due date of annual return. So 31st December 23 4, 31st December 29. So till 2029, this section 73-74 will be effective and thereafter for the litigation matters. So you cannot forget this section. Although there's a sunset clause, that sunset is a long drawn sunset and new provisions will apply. So only thing is that it is only a cutting off a period whereby two separate notices for two types of offenses were being issued under section 73 and 74. And there were lots of issues every time under this whenever this notice we have seen so many of our cases, most of our clients are there over here and there has always been an argument, sir हमने तो कोई suppression किया ही नहीं है, कोई fraud नहीं किया, then हम लोग क्यों penalty भरे? You are right, sir, you are not liable, but the department is not agreeing. You can 100% litigate. They will, instead of paying 15% penalty, they will charge you 100% and you can litigate and prove your matter. But people don't want to litigate. People don't have time to litigate, or they don't want to spend time into litigation. That is why they are paying taxes and relaxing. But otherwise, if you say by way of a contention or um, applicability of law, I think that would there would be no uh, this fraud cases would not get triggered. I will come to one more interesting aspect when we see section 74A, which is now going to be the new section 74A for determination of tax issues from financial year for financial year 24-25 onwards. So now what is, I'll not read the entire provision. I will say in general what has happened now, that both this section 73 and 74 have been clubbed into section 74A. Why not 75? Because 75 already था, इसलिए जगह नहीं था, तो 74A डाल दिया. हम लोग जैसे इनवॉइस में डालते हैं ना, सर एक इनवॉइस छूट गया है तो कौन सा इनवॉइस ऐड करूं, तो ठीक है ए डाल दो, वैसे गवर्नमेंट भी वही कर रहा है. सीरीज ऑफ सेक्शंस चल रहे हैं, उसमें नया सेक्शन डालना है तो 74A डाल दिया. हम भी वैसे इनवॉइस में एक ए ऐड करके हम लोग चलाते हैं, वैसा है ये. Okay, so 74A has come and it has clubbed section 73 and 74. Made some changes here and there in the section. Certain time limits of that have been changed. I don't think we have so much time to discuss the entire changes. I have many slides on this, but I will just summarize and give my comments on it. So first of all, what has happened that any notice or any show cause notice is now required to be issued within 42 months from the due date for furnishing the annual return, or that is 3.5 years from the due date of furnishing of annual return to which a discrepancy pertains, or from the date of erroneous refund. So the time limit is now 42 months for issuance of notice. Earlier it was either 3 years or 5 years based on fraudulent or non-fraudulent. I'm using that word little loosely, those terms only for our general understanding. Fraudulent and non-fraudulent discrepancies, and not other. You should not take it otherwise. Okay, so the time limit has now become 42 months. This is the combined time limit. And the tax liability and the penalties which have been prescribed are, in cases of other than reason of fraud, the penalty is 10% of the tax due, or rupees 10,000, whichever is higher. So even if there is a demand of 500 rupees, can a penalty of 10,000 be levied? And the answer is yes, the government is levying 10,000 rupees penalty, or rather, it is 10,000 CGST and 10,000 SGST each time, because both acts are different. So there's a 20,000 penalty, minimum penalty. Even for a 500 rupees discrepancy, the department can levy 20,000. This is not a new provision. This already existed in section 73. Okay. And where the penalty is for reasons of fraud, etc., the penalty is 100% of the tax due. Okay. The time limit for issuance of orders, it should be within 12 months from the date of issuance of the notice. It is not 12 months from end of 42 months. So if the notice is issued after 30 months, so 12 months after that. If notice is issued after 25 months, within 12 months after that. So that is the, so notice date till order issuance date. So that is how the date has been given, and which is extendable by 6 months under specific conditions. So only under specific conditions, there can be an extension for time limit for issuance of order. Okay. Now, there were voluntary payment options which were available under section 73 and 74. Those options continue. They have not changed. Those options have not changed. Rather, some extra time limit has been granted for exercising those options. Earlier, wherever the time limit was of 30 days, in that 60 days time limit has now been granted. So 30 days extra time limit has been granted in such cases where tax is to be paid either voluntary or under respective uh, headings or respective level of notice in such cases. Okay. So in general, if you want to avoid, or if the taxpayer wants to avoid full penalty, he can voluntarily pay the tax along with interest. Let's understand, everywhere the word is tax along with interest. टैक्स भर दिया, इंटरेस्ट नहीं मिला, नहीं भरा, तो बेनिफिट नहीं मिलेगा वेवर ऑफ पेनल्टी का. Okay, so tax plus interest is mandatory and full interest requires to be paid before the notice is issued under section 74A8 or within 60 days of such notice. नॉन फ्रॉडुलेंट केस के लिए नोटिस आने के पहले आप टैक्स और इंटरेस्ट भर देंगे तो नो पेनल्टी, या नॉन फ्रॉडुलेंट केस में टैक्स आने के 60 डेज के अंदर आप भर सकते हैं. But the biggest problem is once the notice comes, we have seen in 99% of the cases or 95% of the cases, the officers are issuing notice under section 74. Why I'm telling 73 and 74 becomes little. So those are the fraud case notices and other than fraud notices. So in those fraudulent notices, everywhere the department is trying to invoke section 74. Here also the same thing is going to happen. There are two subsections, 74A8 for other than fraud, 74A9 for fraudulent discrepancy. Okay, so in such cases, department may still try to trigger the fraudulent issues notification or fraudulent discrepancies notification, and it will not be advisable to pay after the notice is received in such cases. Of course, then it will become again subject to further litigation that my case was not falling under the fraudulent category, it was falling under the non-fraudulent category. Okay, penalties in case of fraud or any in case of fraudulent discrepancies for avoiding the 100% penalty. See, let's understand. Otherwise, 100% penalty will be levied under section 122. This is a beneficial provision to the extent that in case your activity have found to be fraudulent and you are paying tax, interest, and penalty at the rate of 15%, but before issuance of notice, then 100%, that 85% penalty will be waived off. Similarly, if you are paying tax, interest, and penalty at 25% within 60 days of issuance of notice, notice is the show cause notice. So let's understand there are various parameters. Then tax, interest, penalty at the rate of 50% of tax within 60 days of order of communication. Okay. So notice आने के पहले 15%, नोटिस आ गया उसके 60 दिन के अंदर ऑर्डर आने के पहले अगर आप पेनल्टी भरना है टैक्स इंटरेस्ट के साथ तो 25%. ऑर्डर आ गया, ऑर्डर में भी 100% पेनल्टी लेवी किया है, लेकिन वो आप 60 डेज के अंदर भरते हैं तो 50% पेनल्टी, बैलेंस इज वेव्ड ऑफ. सो दिस आर द थ्री फेजेस इन विच द taxpayer is given an option to pay lesser penalty. Okay, this does
So
not mean
Pranab,
that
there is no
sorry,
way
sorry,
in
sorry.
which
One
I
minute,
can.
let me complete. So this does not mean that the taxpayer should pay penalty under this. If the taxpayer feels that he is not covered under any of this fraudulent and there is no intention to evade tax, I think that word is very, very important. Whether it is an intention to evade tax. If there is no intention to evade tax, I think you can fight the matter. It will again fall back to the non-fraudulent activity. And if there is no intention to evade tax, there should be no penalty. We have our Hindustan Steel judgment since 25 STC that it is not necessary that just in case a penalty shall be levied has been mentioned, then penalty should be levied. This is going to be difficult, but I think we still have those Supreme Court judgments which will help us in fighting such penal consequences. Yeah, sorry, Mitesh, you can.
So basically, Pranab, what you are trying to say is the taxpayers genuinely doing the activities, but erroneously would have claimed any refund. In such situations, they may not fall, they should not, in fact, fall in the trap of notice which talks about fraudulent or willful suppression
Yes,
of the
yes,
facts for evading the tax, and be very, very careful and not start paying the amount immediately after the notice is received before consulting with the experts in this matter.
yes,
Otherwise, it may tantamount to that you have done a wrong or willful misstatement, and that is why you are making the payment upfront
correct.
after seeing the notice, and that may amount to risky situation and litigation.
Yes, right,
Right?
right,
Perfect. Okay. That I think I just wanted to paraphrase that thought process.
correct, 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 correct. I'm not going through the other provisions which are almost similar to the earlier provisions. Here, this section 75. So 73, 74, 74A and 75. So as we were discussing, what happens, and we have seen it in so many cases, a person on whom audit was conducted, he has been served upon a notice. The audit is done, then a show cause notice is issued. In the show cause notice, the point of fraudulent discrepancy is triggered, and notice is issued under section 74. The taxpayer says no, he files an appeal. The appellate authority says yes, this is not with an intention to evade tax, and this section notice under section 74 is irrelevant, it is incorrect, void ab initio. The person should have been issued and assessed under section 73. Here what was happening, by the time the matter reaches the appellate authority level and the appellate authority decides on the matter and tells that this matter falls under a non-fraudulent activity, the time limit for issuance of show cause notice under section 73 had elapsed. And this is very, very specific. If a notice has to be answered, it has to be under particular section only. If notice is issued under section 74, the reply will go under 74. If notice is issued under section 73, reply has to go under section 73. There are specific and respective timelines for notice under section 73 and under section 74. 74 is the extended timeline, 5 years. 73 years, 3 years. Okay. Now, if the section 74 notice was, say, issued in the 4th year, and if the appellate authority tells that, okay, this is a notice which is void ab initio, this should have been issued under 73 or considered as issued under section 73. The time limit for issues of notice under section 73 had elapsed, and hence the entire matter gets washed off. Had this same notice been issued in the 3rd year under section 74, then the section 73 would automatically get triggered. That is what section 75(2) stated. Now, because of such difficulties which department has faced, to save their skin, they have come out with this section 75 amendment, wherein they are telling that in case a appellate authority or a tribunal or court concludes that penalty is not sustainable under 74A52, means in fraud cases, in cases where the penalty has been levied for reason of fraud, etc., then it provides for redetermination of penalty wherein notice was issued for fraudulent discrepancy. But during the course of appellate proceedings, it has been established that there was no fraudulent discrepancy. Then penalty shall be levied on the basis that it is not a fraudulent discrepancy. So automatic section 74 notice gets merged into section 73, or rather under the new section 74A, 74A8 and 74A9, those section get merged based on the authority, and that time limit due to which the notices were being quashed, that will go away, and then the department will tell, okay, आप fraud में नहीं आए तो non fraud में तो है, आपको penalty भरना है. Correct. So I think that is what this entire amendment is, section 75, and no separate notice will be required to levy penalty in such cases. So more powers taken by the department. I think this is the only frowny or the big frowny in this entire GST amendment. Okay, coming to the next, I think these are just certain limits which I need not discuss much about. The maximum cap on the pre-deposit for filing appeals before either the JC appeal, DC appeal, Commissioner appeal, which was 25 crores per CGST Act or SGST Act, that has now been proposed to be reduced to 20 crore. Similarly, in case of tribunal, which was maximum 50 crores, so the demand is 1,000 crores. And 10% is payable. So 100 crores is payable, but that 100 crores is restricted to 50 crores. That is what the amendment is, or rather the provision is. There also they have reduced it to 20 crores. So the respective limits have got reduced. Similarly for IGST, those limits which we saw in the previous slide were for CGST, SGST. Similarly for IGST, these limits have changed. Similarly, the percentage, sorry, the percentage of remaining amount of tax in dispute in cases where appeal is being filed to the tribunal. So for filing the first appeal, which may be either before I say the joint commissioner or the commissioner or deputy commissioner, whatever may be that level, that is the first appellate authority, there 10% of tax in dispute has to be paid. And 100% of tax not in dispute is required to be paid. So 10% of tax in dispute and the remaining 20% of remaining amount of tax in dispute was required to be paid while filing appeal to the tribunal. So here some relief has come. It says that the 10% of remaining amount of tax in, say 1 crore was payable as a 1 crore was the liability. At first appeal level, 10 lakh was paid while filing the appeal with the JC appeal. That order has gone in favor of the department. The taxpayer is filing an appeal to the tribunal. Again, with the same demand of 1 crore rupees, wherein 10 lakh has been paid, remaining is 9 lakh, so 90 lakh. On 90 lakh rupees, 10% of remaining amount of tax in dispute that will be required to be paid by the taxpayer. There is one more way of looking at it. Remaining amount of tax in dispute. So if my tax in dispute remains at 1 crore, I'll still have to pay 10% of the remaining amount. So we really need to see how that remaining amount of tax in dispute is to be calculated. That will be depending on case to case, but that 20% has now got reduced to 10%. That is the amendment. And it is a welcome amendment. I am not going into the details of that. Okay, regarding penalty under section 122B on e-commerce operators, this provision was introduced in the last year and which came into effect from 1st October 23. There was a penalty on the e-commerce operator because see, composition dealers are not allowed to make transactions through e-commerce operator. Unregistered persons are not allowed. There are so many certain categories wherein such dealers are not allowed to make transactions through e-commerce operators. If e-commerce operator allows such people to transact on their platform, the penalty is being cast on the e-commerce operators. Fair enough. The only problem which came and where the industry represented that in this definition of e-commerce operator, what we generally understand e-commerce operators, the normal definition is means anybody who sells anything on the internet or maybe on the website through website is called an e-commerce operator. So say if say Philips India is selling its products on Philips India website, it becomes an e-commerce operator. Amazon, if it is selling that same product of Philips through its website, is another e-commerce operator. But the only difference is Amazon in such case, again, I give a disclaimer, these names are only for namesake and no live cases or nothing to, in for or against such companies. Say Amazon is again an e-commerce operator, but Amazon is liable to collect tax at source under section 52 of the CGST Act. And the penalty should have been levied on in such cases only. Inadvertently, there was an error in the act which proposed this penalty, and they have sought to rectify this error by way of this amendment that okay, this penalty should be applicable only on such e-commerce operators who are required to collect TCS under section 52 and not on other e-commerce operators. So I think that's the difference. Again, I think a very, very important section 128A. I think I'll take a little of this and maybe then we can go for question answers. Others, or maybe the circulars if time permits. We already exceeded our time. A very important section 128A. This is indirect tax and the amnesty has also come indirectly. So there's no announcement of any direct amnesty by the government. But yes, it has been proposed to provide conditional waiver of interest and penalty in respect of demand notices under section 73. 73 only, understand it is not 74. अगर 74 के अंदर शो कॉज नोटिस आया है तो इसमें एप्लीकेबल नहीं है. बहुत सारे केसेस में आफ्टर ऑडिट द डिपार्टमेंट इज इशूइंग नोटिस अंडर सेक्शन 74 टेलिंग कि हमने ये ऑडिट अगर नहीं किया होता तो आप आते ही नहीं, आप टैक्स ही नहीं भरते, इसलिए हम नोटिस अंडर सेक्शन 74 निकल रहे हैं. So then, prima facie, you don't qualify except in a different manner. Okay, first let's understand the basics. Okay, so this is applicable only for notices issued under Section 73. Okay, what stages? For such taxpayers who have been issued show cause notice under Section 73(1) or statement under Section 73, which is again similar to 73(1) notice, and where no demand order under Section 73(9) has been passed. Show cause notice is issued, but order is not passed. Again, this is applicable for 3 years and not for 4 years. Section 16(4) ka amendment, which was there, was applicable for 4 years. Here, please mind, this is only for 3 years, 1718, 1819, and 1920. Okay. So where only show cause notice has been issued, but order not passed. Second category, demand order has been passed under 73(9) and no order under 107(11) has been passed by the appellate authority or by the revisional authority. So this is the second scenario wherein show cause notice was issued and order is passed, but appellate authority has not issued any order. Maybe the person, the taxpayer might have filed an appeal, might not have filed an appeal. Okay. And third is no order is passed by the revisional authority, because we have seen in so many cases department is so moto taking up revision of the orders issued by its other officers. Department itself is reviewing those orders and issuing revision orders. A very, very lethal weapon which the department is using against the taxpayers, wherein even though a matter has been concluded, they have kept powers to review and revise the orders issued by the other authority, and the higher authority has those powers. Okay, so this is scenario number two. Scenario number three, order passed under section 111 by the appellate authority. Appellate authority here means the first appellate authority, which is the joint commissioner, deputy commissioner, or commissioner. They all come under appellate authority, or by the revisional authority, and where no order under 113 has been passed by the tribunal. So different scenarios, different stages in which, and we are having all these stages in our client's case. I think every situation is alive. We have live cases in each and every of these situations. Okay. So what are the conditions? The tax amount as per the notice, statement, or order referred above needs to be paid in full. So here you need to pay the tax only, not the interest. In cases where appeal is filed, the same needs to be withdrawn in order to avail the benefit of this amnesty. What is the waiver? Full interest and penalty shall be waived. Where such interest and penalty has already been paid, no refund shall be of the same shall be available. अगर आपने litigate नहीं करना है, टैक्स भर दो, टैक्स पे टैक्स एंड रिलैक्स, तो रिलैक्स, एमनेस्टी में भी रिलैक्स ही रहो आप लोग, तो आपको कोई परेशानी नहीं है एमनेस्टी का। अगर आपने केस लाइव रखा है, बिकॉज जीएसटी बीइंग वो है ना, आई ऑलवेज टेल, आई गिव दिस एग्जांपल, इट्स दिस इज 7 year old किड। जब भी छोटा बच्चा होता है, दांत आते हैं, जुलाब हो जाता है, right? Teething problems, these are the teething problems. The GST law is not yet matured, it has not even reached its teens to become a mature law. Lots of changes, and it's a khichdi of so many other laws. The assessing officers are also mixed, from the state, from the central department, having their own background. So all these questions, and they have their own thinking process, right? So all these things are going to happen under GST. So in case if your matter is live, you will be eligible for claiming the benefits of amnesty under the scheme. And we have practically advised to most of our clients, each time, every time, you can keep the case live, and someday or the other some amnesty will come, and we are happy that this has come, although for a short period, but we don't lose the hope for the future periods also. Fair enough. So okay, so again, this is a very important point. Kritika has made these slides and has marked this as important over here, so that for us also to, again understand, okay, it's an important provision. So this is like section 75(2). So a situation which we discussed earlier. So, so a situation where a notice has been issued under section 74(1), order is passed or required to be passed by the proper officer in pursuance of the direction of the appellate authority or tribunal or court in accordance with the provisions of section 75(2), the said notice or order shall be considered to be a notice or order as the case may be referred to in clause A or clause B of section 128A(1). So, this is again a situation wherein, say, your existing show cause notice is under section 74, against which an appeal is filed to the department. The department gives an order. All this has to happen within some timelines. Huh? It's not so easy. Department appellate officer gives an order that this 74 was erroneous, wrongly issued notice. It should have been under 73. Further, that 73 timeline also is applicable within the 3 years of section 73 notice timelines, provided all those conditions are duly filled. Then your case can directly qualify for this amnesty. Okay, subject to all those parameters and conditions. Lots of conditions are attached to this. So, so there the benefit of section 128 1A amnesty can be taken. I think this I have already taken up. Okay. The last date to make payment of tax under section 128A has been recommended as 31st March 2025 by the GST Council. However, the same is yet to be notified. So the GST Council has recommended that you will be required to pay tax. The tax is paid up to 31st March 25. GST Council is aware that once the finance bill is, amendments are brought in the finance bill, it is going to take time for the approval from all the states for this to become an act and then to get implemented and all these things happening. Already we are facing issues, practical issues with so many officers. They are telling that we don't rely on the proposed amendment and you will have to pay 100% tax or you file an appeal because these provisions have not become effective yet. Okay. Today only I have also told we are associated with also many tax organizations. Of course, where I am also associated in GST PM CTC, we have already I have given them this pointer that a representation needs to be made to the finance minister to come out with a circular in the meantime till the time the provisions become operational so that such hassles do not arise. This already, I think, this process has been initiated for representing to the finance minister. Uh, okay, section 171. Again, only two small points over here. Uh, Appellate tribunal has been given the powers to examine the cases of anti-profiteering under section 171, and there is going to be a sunset clause on these anti-profiteering provisions, which will be notified by the government that no application will be accepted after that particular date. That date is not yet announced, but that will come into play. Well, I don't know what is happening at that level. Earlier, the Director General of Safeguards, then the Commission of India, and the Director General of Anti-Profiteering were carrying out the functions relating to anti-profiteering. The shift, the onus of determining the anti-profiteering provision, three authorities have already changed in 7 years. The authority itself. Now, they are seeking to transfer these cases to the tribunal. So let's see what impact it gives. I think we can skip this.
We will actually circulate this entire presentation in PDF format for everyone's benefit who have been attending the session. So you can take a note of it and see whatever is applicable and relevant to you, because there are a lot of fine issues and fine aspects which need to be spoken about when we are talking about these amendments. And we have to give a lot of examples and explanations when we talk about certain changes that have come in for the benefit of the audience to understand what exactly does this mean. So it becomes very difficult for covering all small aspects of proposed changes in the union budget. But I think Pranabha has tried to cover most of them, and which are very important for the industry and the taxpayers in the GST regime. so that they can take the benefit of it. And of course, the video will also be on the YouTube channel very soon. So you all can refer to these content whenever you feel some relevant thing has to be referred. And again, as I told you, and Pranav, I also told you, please consult the expert before taking any crucial call, and don't just rely on this information on a standalone basis to take the decision. This is more to make you aware and alert about what has happened, how it has happened, and how it will impact you in general. Okay, so maybe Pranabha, you can carry on.
So, Mitesh, should we continue or should we ask the participants? So now I think the main budget amendments or the union budget amendments have been covered.
Sure.
What now remains is this 25 circulars which have been issued by the 53rd GST Council meeting.
I
So
think we have already we'll circulate a GST Mitral
yeah. And
newsletter
whatever important
on
are
these
there, I have already
changes.
highlighted them. I already highlighted whichever all this important.
So we will actually circulate our newsletter, which we keep on circulating on crucial amendments and changes or notifications or circulars which are applicable to you all over a period of time in the form of GST Mitra. Uh, if you are not receiving the circulars, please put your email ID on the chat box, or you can send an email to info@apmh.in for registering yourself on the newsletter so that you can keep on getting relevant news and important information and changes in GST law or the notifications or the circulars with our interpretation, of course, on what we feel about these changes and what is our view on these changes. And of course, you can also subscribe to our YouTube channel for continuous updates like these or knowledge sessions like this. And you can also circulate or forward the videos or information that we discussed. And of course, the PowerPoint presentation through your own social media or WhatsApp, as and when you feel it is relevant to the people around or people in the industry that you know would like to see or understand this. With this, maybe we will conclude today's session. I can't see many questions on the chat box, but you can feel free to ask any questions on info@apmh.in or pranav@apmh.in, directly addressing them to Pranavai as and when you have them. And maybe we'll conclude today's session and we'll circulate the
Yes.
presentation. Yes, Pranavai, you want to say something? Yeah.
Yeah, no, not much. Only thing is that while concluding, I would like to thank all the participants who have attended this webinar, our APMH team, and especially my GST team. I had sent a message to them to on their videos at the end of this session. I really want to thank each one of them because it is their inputs which helps at us at APMH, to make this budget booklet as well as these slides. I would really like to thank each and every one of them. So I request every one of them, the GST team, to please uh, open their videos, to on their videos.
Pratik Mehta, Urvi Bhimjiani, Krutika Jain, Urjita Nada, and Koral Mehta. All these are chartered accountants, which are part of our core team of GST APMH
Kritika,
and
please.
have been immensely contributing to various newsletters, GST Mitra. We do every month GST Study Circle, and of course our YouTube channel, our blogs on GST, which are full of knowledge and information for the GST dealers and GST payers like you all. I'm sure you would also like to appreciate their hard work. And with this, maybe we can conclude today's session. Thank you. Thank you, everyone.
Thank you,
And
everyone.